Good morning, everybody. Welcome to another wonderful episode, if I may say so, in our Tomorrow is Beautiful webinar series. I really hope and pray that everybody is in good health and with all the cold fronts sitting in on our country, that you are warm, having a cup of tea or coffee at hand, as we now are going to enjoy a very insightful sharing by Dr. Antje Hagate, our main attraction for the day. So, day 103 of lockdown, and everybody, I hope, is still hopeful, and that together we will overcome. So, colleagues, today's speaker is Dr. Antje Hagate, the Dean of the School of Investment and Banking at Milpark, who's going to talk to us about the future of banking. And I'm sure that every one of you have really thought about many of these things and the progress, the phenomenal technological progress that's happening specifically in that area. You know, the digitization or digitalization, as I understand, the two doesn't mean the same thing. We think of blockchain and artificial intelligence and the application of the Internet of Things, and the list goes on within the financial services space and the banking sector as well. So there is a lot happening in there, in that space, and it's going to be wonderful this morning to hear what Antje has to share with us. And just by means of quick introduction, besides heading up the School of Investment and Banking, Antje is a versatile finance professional with academic management experience in the higher education industry, as well as extensive practical industry experience. Friends, Antje's expertise spans banking, investment management, and risk management, and she also consults frequently to industry. So we're really looking forward. Antje, welcome. Thank you for investing some of your time with us this morning, and we're really looking forward to what you have to share with us this morning. And I now hand over to you.
Yes, thank you, Cobus. Thanks very much for the introduction. Just give me a heads up, Cobus, whether you can hear me. Microphone is loud enough. I hope that that's the case. If not, please just perfect. If there's anything that that you are experiencing in terms of technology, please also feel free to type into the window. Yeah, well, like Cobus said, we have a very exciting topic here today. And it's also a bit controversial, I think, because whenever we speak about the future of something, then we have to deal with forecasting the future, which is quite tricky, and normally people don't necessarily agree all the time on it. You might have seen that we put up a video for you, and that is really a glimpse into the future of banking and the future of a specific workday and how it could look like, everything being computerized and automized. So if you haven't had a look at it as yet, please do so. And I would be very excited to hear from you whether this is how you would like to live or you wouldn't like to live like this. It's quite a controlled environment. So, yeah. The focus today is going to be the different topics that you can see now on the screen. And we're going to explore the future of all of these different topics. So if we move on to the banker, that was my first topic to look at. What is the future of the banker, the person that actually is employed in the banking industry? And as you might have read also on different platforms, there are new skills that are required. And those future-enabled skills, particularly in the banking industry, span over 3 areas mainly. It's compliance and risk, it's IT, and it's selling. So if you wanted to look at a bank of the future, then you probably have those 3 areas mainly. And that's quite a change. It also means that bankers have to be knowledgeable about all 3 areas. So if somebody is in selling, they need to understand the 2 areas as well. So that's quite a change in terms of the skills that are needed. And I know that most banks are reskilling, upskilling, and using their existing employees and preparing them for the future. The next slide, just to give you an idea of some of the future job titles. And I, when I looked at them, I actually felt like those are quite a mouthful. But the one that I wanted to particularly focus on here is the Universal Service Advisor. I said it earlier. It is now expected that somebody that is in selling in a bank needs to have a universal approach and needs to sell to different clients a very, very broad product range. And this has been tried out in the past, so it's not something that is completely new, but we understand that universal bankers of the future are under tremendous pressure to sell products, profitable products at that, to a wide range of customers that are quite spoiled from other industries in terms of choice, in terms of convenience. And I think in my mind, at least, and that's perhaps a topic of discussion also for later, is this actually possible? Is it realistic that somebody can have the knowledge across all of these different products? For me, it is quite a challenge. Yeah, so that's in terms of the career, banking career, those changes that we are going to see. The next topic then of discussion is the customer itself. So what are the trends in terms of the customer? You can see this, this graph is probably a little bit small, so I'm going to take you through it. It's all about segmenting customers no longer according to traditional criteria, as in what is the credit history, what is the age, what is the job, and perhaps the income. It is all about the technological preferences. It's about personal preferences. It's about attitudes and behaviors. So that's how customers are segmented going forward. And like I said, customers are spoiled from other retailers, and everything is there at the at a second's click, and that's what they then expect also from their bank. The next slide is again about the customer, and as you can imagine, the customer now has certain attitudes and behaviors. Some of them are very technologically advanced. And I said they are spoiled from other retailers. That also means that there is a continuous engagement that is required. And this engagement is really going to make a difference in terms of a competitive advantage for a bank. I've given you some examples here from banks in other countries. Gamification is a very important customer engagement strategy already. So it's going to continue into the future. The ones that I found quite interesting was the second one from Bulgaria, Bank in Bulgaria. And that's a bit of a trend in other banks also, that there are mobile apps and they are all about reaching specific savings and financial goals. It is helping somebody not to get into too indebted. It is about helping somebody to perhaps educate themselves financially more so. And then those rewards are linked to, say, you attend a webinar about financial topics, about personal budgeting, and then you gain these points. So it's not really a new product as such. It's really an experience that is improved, and it is all about engaging the customer and creating convenience and taking the customer by the hand. Another one here that I found interesting is a bank in Singapore who is allowing their customers to design personalized credit cards. And you might have read already about the fact that everything in banking needs to be personalized, which is quite difficult because that's not going to make your platform necessarily profitable. But this is a very smart way to actually do this. Yeah, so that I found quite interesting. There's a few others you can look at. Yeah, so that's in terms of the customer. If we want to move on to the next slide, products and services. What are the future products and services? I see it already in a lot of cases. It's really not a new product, in the sense that banking products are not changing in itself. I mean, there's a payment is still a payment. You want to invest, it's still an investment product. But it's the surrounding applications and features that are changing. And this one I found particularly interesting. A bank in Turkey. This is an agricultural banking app. And you might have heard about the lifestyle ecosystem approach in banking, where non-traditional banking products are added to an existing banking product. And this is the case here. So the agricultural banking app, this bank has partnered with regional experts that are available to give advice and assistance to farmers. And at the same time, then this app can also give insight into planting, watering, fertilizing, and then it links back to banking products like loans for machinery, leasing, and other banking products that might be interesting for those farmers. So this is just one example, but there are many other examples where these improved products or additional features to an existing product are added. So they are quite similar. The next slide then is another one about products and services. Just to give you an idea about corporate banking, obviously retail banking and personal banking is much more advanced in terms of digitalizing services and making sure that the customer is engaged with digital products and services and benefits. But in corporate banking, as you can see, the product is much more complex. And I would say even in business banking, depending on what the product is about, if we look into the loans credit space, those solutions are much more complex, and hence they are not easily personalized. So as you can see, wherever we see there's going to be advice involved, then the digitalization is going to be less. And where we are sitting with transactional issues and payments for businesses and for corporates, then that is easier to be digitized. The next topic that we're going to explore is different technologies. And you might have read about those. Cobus also mentioned some of those key words and buzzwords that we hear all the time. The top 5 technologies and the top 5 artificial intelligence tools I've put on the slide for you so we can quickly just chat about those. Digital account openings, that's the biggest trend. And it has been a topic for a while, but it seems as though banks really struggle to design them in such a way that they're customer friendly. And very often they are set up in such a way that regulation determines how they look. Because obviously there's certain regulation in terms of account opening, knowing your customer and identifying your customer, and very often it's designed around that. So that's a bit of a struggle. Then we have peer-to-peer payments, which you might have heard. Companies like PayPal, Venmo, Cash App, they offer peer-to-peer payment systems, and you can easily then send money from your mobile device through a linked bank account or card. Next one is video collaboration. I think that has been a bit at a slower pace than expected, because branches are still up and running. And I said earlier, if we speak about the future and to forecast the future, then branches have been forecasted to be extinct a long time ago, but they are still around. But I know that from conversations with industry, that these universal bankers that are going out, not physically going out, but are going out to get more business, they are using video collaboration and video tools to speak to their customers. Then cloud computing, I think that's probably something that you're all familiar with. With all the artificial intelligence adoption, it is really important that there's enough, there's a big enough data sources available. Then also the platformification of analytics. All of these analytical tools require a lot of data, so that then supports this trend for cloud computing. And then also financial health has become a very important topic of competitive advantage for banks, knowing about details about financial health of their clients, and this data can also be quite extensive. Then we're speaking about APIs, and those are application programming interfaces, and that's really about personalization. And in this case, in a lot of cases, the best approach to this is a partial stack of financial services providers, and then combined with a full stack of a banking solution, so that banks can take advantage of what the smaller fintech companies can maybe do better. So it's a combination of both. Then in terms of the artificial intelligence tools, I think you probably have heard of robotic process automation, machine learning, deep learning, which is even more complex than machine learning in terms of using neural networks for learning, natural language processing, which is an approach to this whole critique that robots can't deal with human interaction, and they can't compete with what humans can understand in terms of language, now to respond to that. So that's already also progressing very fast. And then blockchain, that will make platforms more transparent and more secure. So those are some of the technologies that are at the moment being talked about, and I wanted to give you an idea of those at least. Obviously, there's others, but those are the main ones. So we go to the next slide then. There is this whole aspect of humans and technology. I said that already. Humans compete to some extent with technology, and there's a lot of bankers that are really worried to lose their jobs, and they are scared of technology. But obviously, we all have to work together, and the best approach we can have is to combine humans and technology. But just have a look at the slide to see what are some of the forecasts that we are dealing with. I found this very, very interesting, and links back to the video that I posted at the beginning of the session. Is this something to be excited about? Is it something to be scared about? Is this control over you as the human actually something that you would like? And by both of those, I think you can see in a positive and a negative light. So perhaps later on we can have some opinions on that. Then the next slide, we are talking about delivery. And that's a very frequent topic of discussion. I made a comment earlier on the chat room here before we started about delivery. And I think there's a lot of discussion at the moment around whether COVID-19 has now fast forwarded the whole digital banking approach. And in my mind, that's not really the case, because digitalization of banking is a long-term strategy and it needs to be holistic. So it's not just about, we're going to close this branch down and then we're going to expect clients to only use the internet banking that we have on offer. It's not that. It's actually much more complex than that, in the sense that I said earlier, clients are quite spoiled from other retailers. So as you can imagine, if you are able to buy your groceries online and you're also able to go to the shop and you're also able to phone in and order, then you want to transition between these different channels. You don't want to have to pick only one. And that's exactly the trend that we are seeing in banking. As you can see on the graph, most clients are actually using multiple channels. And that makes it quite difficult for technology in banking, because that then requires the universal banker that we spoke about to transcend these different channels and to be available and to have access to all the data of the client across these different channels. So a multi-channel strategy has become quite a necessity, and it's not necessarily cheap, and technologically it's quite complex to achieve. There have been a lot of recent surveys from different consulting companies that have looked into this, and we can see, and they have seen that customers are at the beginning quite happy with their service in one channel, and then as they transcend to a different channel, they lose this satisfaction, and they're not as satisfied anymore, because it's not an easy transition. So this is definitely a big competitive factor for banks to be able to do this holistically and do this well. One example of a new channel that has been used in Poland by Idea Bank is called phygital distribution. It's a mix of physical and digital. And I put a small picture here for you to see. This is a train, and they are calling it the Idea Hub Express. It's the first bank branch on tracks. And the idea is really to create a co-working space that allows train passengers and especially business travelers to make better use of their time while in the train. and there's a Wi-Fi connection, there's office equipment, there's printers, there's coffee machines, and that's a new trend of a distribution category which has won a prize. I showed earlier the bank in Turkey with the agricultural banking app. So they won a global prize for the best product app, and this was the bank that won the best prize for the innovative distribution channel. Yeah, next slide is again about delivery. One other aspect that I wanted to chat about. Can go to the next delivery idea or channel. I've given you an example here of different Latin American countries that use banking agents. I'm not sure whether you've read or heard about this. They are also used in DRC, they're used in Indonesia, in Asia, and other emerging markets. And the idea is that somebody is employed as a banking agent, they have access to tablets, and they go to these very rural areas where it's not worth the bank's while to really open a branch. But maybe those customers also don't have access to technology very easily. So the idea is that these banking agents then go in with their tablet and they can instantly process payments and process transactions and also give advice to those customers. I'm not aware that it's been tried out in South Africa, but that's also a topic for discussion, whether that would be something worthwhile to think about, because we speak about all of this technology and that customers will use technology, but we mustn't forget that we live in an emerging market and some clients just don't have access to the technology. So that's in terms of the delivery. Then the last two slides are about 2050, which sounds very far away. I wanted to just give you two things to think about and perhaps to discuss later. Forecasting the future, we've already spoken about that. Not all forecasts are coming true. And like I said, branches have been forecasted to disappear quite a long time ago. But those two statements here, one from a professor of biochemistry from 1988, and the other one is from a businessman, 1977. You can see one of them came true and the other one didn't come true. So now we're in this period of uncertainty where forecasting something is great, but we're not sure whether we're not always sure whether something is going to hold true or not. And 2050 is really still a very long time to go. On the next slide, I've put some ideas of how we could operate in 2050. And now you can say this is all science fiction or maybe it's fantasy. But it is something that we need to engage with. We need to stay agile and we need to develop our imagination into the future. We can't stay here, and hence we need to manage and live with change. It's unavoidable. Have a look here at some of those statements. Self-flying devices. AI-based assistants. We've already seen this in the video also. What I found also very interesting is that by 2031, we could maybe have a situation where banknotes and coins are admired in museums. And we might have cryptocurrencies which are experienced outside Earth. I know it sounds really far away, but bear with me. And governments will use artificial intelligence, they will use quantum computers, and they will have everything under control in terms of financial system. There's going to be no crisis, and these financial systems might exist in extraterrestrial areas. So far away, fantasy, fiction, you decide. So that brings me to the end of the formal presentation. I think there's a lot of things to discuss and disagree about, and I think Cobus will moderate the discussion and perhaps start us off with one or two comments of his own. I'm looking forward to engaging with you.
Oh, thanks, Antje. Yeah, absolutely fascinating. In my own field of interest, I endeavor to stay in touch with many of these developments, but it's just so fast and so furious that it's impossible, especially if one looks across industries, but within the banking sector, especially. And the things you shared with us, starting off with a future-enabled skills in digital banking, and what would be the skills required by a banker of the future, and some of those future job titles. I've found them very, very interesting, like the mixed reality experience designer, or the one that you also elaborated on, the universal service advisor, or the partnership gateway enabler. Fascinating stuff, eh? And those kinds of jobs, I don't know of them existing at the moment, or maybe in one shape, form, or the other. And then, of course, the segmentation of the future customer, which is much different than today, and the whole gamification as a customer engagement strategy that probably many banking institutions are already evaluating and considering. You shared with us the products and services, and although in its essence it doesn't change that much, but the augmentation of those with the technology features and the applications, and also about the much more complex corporate banking, which one can expect to become even more advanced with very complex products. And then you shared about the technologies, robotics, machine learning, deep learning, and so forth, and even blockchain. Now, when you hear robotics, you're thinking of this, what we see in the movies, this robot that can talk and do things, but we're already experiencing these robo chat or chat bots or whatever in many of, if you engage with some of these platforms already. So these things are going to become part of our lives, and the machine learning and the deep learning, the natural language processing that's utilized behind all of that, and then of course the developments in blockchain. There's I don't know a great deal about the workings or the science behind it, but my understanding is that it will hold a lot of promises for us as we go forward. And then of course the competition, if I can use that expression, between humans and technology, and people that are quite concerned that they're going to lose their jobs to machines. And then how do we deliver these things? And you highlighted the absolute necessity of having a multi-channel strategy, which if anybody wish or desires to still be in business in 10 years time, that will have to be something that they will really have to apply. And then I found it intriguing if you compare the Ken Olsen and the Isaac Asimov views of the future. Where are we at today? We can see that Ken Olsen's views was absolutely not true, but Isaac Asimov, we're experiencing those things as real. So a lot of things, as you said, about as a science fiction or fantasy, but of these possible developments. But I think a very large part of society is very ignorant about these things that's already in experimentation, in beta stage or one or the other. But then, of course, the others that's already there that you and I use every day. I remember about a month ago receiving an email from my bank saying that they will now officially abandon, discard checkbooks, the physical checkbook. Now, I know I haven't used a checkbook in, I don't know, maybe 15 years or so, more than that. I don't have one. But there are still people that I know, senior citizens, that quite like to write, the check out and tear it out and hand it over, that kind of thing. But I mean, that's something of the past. We don't have that anymore. So fascinating. Antje, thank you so much. I see Jen there from Sfiso. How is the South African banking future landscape looking like? And are our banks adapting to the change? With our country's social and economic disparities, will the new technologies enhance or ease these challenges? Your thoughts, Antje?
Yeah, that's a very good question. I alluded to earlier that we are in an emerging market, and hence there are many customers that are financially excluded. And that's the same with other emerging markets. And that's why I suggested this banking agent approach. It's been successfully run in other countries. So this is something that I can really see as an opportunity for banks. Other than that, in the South African context, I think most banks are out to or forced to sell profitable products to customers that are profitable. And oftentimes they see those financially excluded customers not as how can I say, not as exciting or not as profitable, and the amount of products that can be sold to them are not there's not many products that can be sold to them. Hence, I mean, we have discussed in the past whether there should be a state bank, and there was discussions around the Post Bank taking care of those, a big part of the customers that are not included in the financial services industry. So I think we have not really resolved, in South Africa, we have not really resolved the problem. And there are many of those financially excluded customers that would be quite interesting for banks to explore and to accompany them as they improve, as they set up a business and as they grow. So that's not tapped into at all at the moment. So we are still, dragging our feet, I think, a bit there.
Okay. Antje, thank you so much. Indeed, when one looks at these things and my own findings, there are many opportunities embedded in these advancements, but there are also numerous thorny issues. And we need to find solutions to the thorny issues. And I know the word has been thrown around a lot about democratizing, banking, making it accessible for everyone. So, but there are so many challenges if we just consider and perhaps, what are your thoughts then on the role of ethics within all of this advancements? If you just consider privacy and data, who owns the data, and then even we read a lot about programmer bias that finds its way into the artificial intelligence in the algorithms and things like that. But what are your thoughts on the role of ethics in all of this?
Well, I think that with blockchain and with other technologies, those data security issues are going to be tackled quite well, and we're going to see improvements in it. I have not seen any evidence that we are ethically not doing the right thing by selling the wrong products to clients. I don't think it's an issue in South Africa. In actual fact, when I did my research for my PhD, I found that most clients have not been inundated with calls to be sold to. And hence, a big portion of South Africans' problem is not that they are being sold the wrong investment products or the wrong products to invest their money in. They are being sold too many loan products. And hence, they are further indebted. And that's actually quite a big problem, because all of these financial technologies are enabling people that maybe don't have the resources and don't have the money to buy, and when they shouldn't buy because they don't have the money. And hence, I mean, there was one slide, I think, where the World Bank let me just find it quickly, where the forecast was that, the World Health Organization, they will identify online shopping as an addictive disorder because millions can abuse these digital online offerings when they don't have money. So that's quite a problem. And in order to actually see these clients grow and to enable them to become profitable and attractive customers, you need to have a long-term view. So that's not something that can be dealt with overnight. Yeah.
Wow. All right. Fantastic. I see we've got another question there. Can you forecast the development of banking after COVID, as well as, I think, in the same kind of, Enrico, your opinion on COVID-19's impact on banks now and on the future, for example, funding is concerned. So it's all about your views on the development of banking post-COVID.
Yeah, I think we need to differentiate perhaps the short term and the long term of it. So I made a post at the beginning of the session to say that I think there's an opinion out there that says, now that we're in the COVID situation, customers don't go to the branch as often anymore, so they are getting used to doing online banking, and hence that then will influence, what is going to happen after COVID, and they will keep up that their behavior and how they engage with banking. That might be true, but that's a small portion of the overall digital banking strategy. So to now say that this is now going to speed up the process of digital banking, I don't think so. Because like I said earlier, it is crucial to have a long-term strategy in terms of multi-channels. And there's a lot of legacy issues and a lot of huge IT investments that banks need to make in a time where the economic situation is actually not good at all. So I think that it will not necessarily speed it up. It might change some behavior on the customer side, but we still need all these multi-channels. So that I can't see that happening. The outlook for the banks, there's been a profit warning for Capitec. We've seen that. We've seen other estimations that when the GDP contracts about 7%, going fast forwarding into the end of this year, or even more so, then obviously the outlook is very uncertain for banks, and they making less revenue from interest charges because obviously the benchmark rates are at a record low, and transactions might have slowed down because people have lost their jobs, and it will be harder for individuals to repay their debt. I think some banks have allowed these debt holidays where they have allowed customers to take a break. So I think the situation is quite dire for these banks from an economic point of view. They will see an increase in non-performing loans, and at the same time they need to continue investing into these new technologies. So I think it will be quite a rough year or even two for banks. I can't see in the short term that it will be a positive outlook.
Okay, Antje, thank you so much. And a very important question from Riza. The informal economy is an area of the economy that banks struggle to acquire and solve for, from the examples that you gave in terms of the digital banking of the future, the API, machine learning, customer experience design. So the question then, does this approach not push this sector of the economy further away as opposed to trying to bring them closer? Your thoughts on that, Antje?
Well, it might, and I agree that we haven't solved for it, and there are various ways in which you can solve for it. I mean, like I said earlier, from the state bank, which has been implemented quite successfully in India, and India has reduced their financial exclusion quite a bit by doing that. But it is all a matter of approaching those customers in such a way that we do it in an ethical manner. So we include customers for the right reasons, and we try and accompany them. And I think banks don't always have a long-term view, because they can't afford to have a long-term view, because they are listed companies and they have shareholders, and they have certain regulatory requirements that they need to make sure that they stick to. So it's quite difficult for them to tackle it. And secondly, I think there's such a huge underlying socioeconomic problem that the bank cannot solve, because the bank cannot perhaps solve the problem that somebody is in a dire situation and they can't get out of it, and they lose their job, and maybe they don't have the qualification to set up a business, and they don't have any mental support perhaps, and hence they're stuck in that situation that they are in. So it's quite difficult for a bank to actually then tackle this. That's why I said earlier, I think, because in a lot of emerging markets, they are using these banking agent models, and that has been really successful because there is a one-on-one personal situation there with somebody, as opposed to, getting access to technology and getting access to services that maybe you cannot afford. That's not a good idea. So, yeah, I think that's my opinion on that one.
Okay, Antje, thank you so much. Colleagues, please, if there's any more questions, you please post them. I was wondering if you have any views on the poll that you've uploaded. Are banks going to die? What is most likely trend for banks going forward? And select one option from the following 5. And I note there that option E is running at 45.5% of the votes at the moment, the top one. followed by B, and then A with nobody has yet, or D, regulated bank hasn't got any vote at the moment. So, what your thoughts on the votes?
Cobus, I can't see the percentages. So, are you saying that E has how many votes?
Yeah, it's 45.5%.
Sure.
This intermediate bank, incumbent banks, irrelevant because no longer a need for balance sheet intermediation. Yeah, that one's got the top one, 45%.
Sure, that is quite a high
In this scenario,
number.
customers may have yeah, true, eh? In this scenario, customers may have a more direct say in choosing the services and the provider. Okay, that is fascinating. I was wondering, as you were speaking earlier on, the matter of the human I don't want to say versus, because it sounds like we're at war with the machines, but it's not. You alluded to the fact that it's about augmenting each other, or augmenting our own abilities with the use of machines, or robotics and so forth. But what would your advice be then? Perhaps firstly from a banker's perspective, then in preparing for the digital banking future. And I know people, it depends where you are on the hierarchy, you know, whether you're from a teller on the one end or whether you're setting up in senior management. But I'm sure that no matter where one sits in the banking space, you know, these are things you really have to think about. But what would you generally say, or advice? Let's say I'm a risk management. I'm a risk manager at a bank. What advice would you give me in preparing or in reskilling myself or acquiring the right skills for the bank of the future?
But I haven't answered the first question. Cobus, do you want me to quickly just make a comment there also on the poll? Or shall we go with?
Yes, please.
Yeah.
Please.
The 45% is actually, I was expecting quite a high percentage, but I'm surprised that it is that high. I think it depends very much on the type of client that we looking at. And because, like I said earlier, in corporate banking, it really looks slightly different. And in order for a corporate customer not to need a bank anymore, regulation would have to change dramatically. We are seeing a lot of shadow banks, so-called shadow banks out there already, but they are operating in a gray area. I can understand if you think of your payments, your maybe a simple savings account, and that, then perhaps that is easily sorted out by another provider, and regulation can make provision for that. But in the corporate banking field, I'm not sure whether it can work in the long term. So that's my comment on this. And then in terms of the career as a banker, I think if you want to differentiate these three areas, so like we said, at the beginning, we had a slide with the future skills, and I said that there was three areas. So there's the whole risk, governance, and compliance area. There's an IT area, and then there's the sales. So on the risk side, I think it's crucial to understand that technology will enable you as a risk manager to perhaps make better decisions. And these models and all the data that you have at your fingertips will perhaps enable you to make better decisions. But that will only be the case if you understand the data. So in this case, it's crucially important for somebody to upskill themselves in data modeling, and perhaps they don't need to write the program themselves, and they don't need to They don't need to be able to churn out these models, but they need to be able to interpret them. That's going to be crucial. And as we have seen in the global financial crisis, it's all well and good to have all of these models, but if you don't question them and if you don't know how to question them and what exactly to question, then they can also give you the wrong advice. So that we don't want to make that mistake again. So that's important. Otherwise, I don't think that there will be more regulation and more ethical principles to be followed. I think this area is going to grow further. And then obviously on the IT side, we've already seen that there's a lot of data scientists that banks are employing, and statisticians, and those are the skills that are needed. If you look on the sales side, actually, I can foresee that if you're not a real salesperson, and that's not your attitude and your point of strength, then you will be under incredibly amount of pressure to sell, and I can see that people are going to exit there because it's not their strength. So for those people, it will be incredibly important. Either you are that type of person that enjoys selling and you don't mind the pressure of having to sell a lot and to upskill yourself across all of these different products and deal with clients that are difficult and that where the principle is almost the least amount of they will choose whatever is fastest, not whatever is the best product. They will. So,
of course.
So that's the environment that you will deal with if you're a salesperson in a bank. And if that's not, and there's nothing wrong with that. I'm sure there's enough people that will enjoy that and they will be good at it. But if it's not something that is for you, then I think it's important that you then either upskill yourself on the IT side so that you can move into, say, product design, and looking at data analytics and interpreting data, or you then move into the risk and compliance side. So that those are the skills changes that I can see.
All right, Antje, thank you. And I'm conscious of our time. I think that links to that. Then, if you now, as a kind of a message to educators and trainers, what would your advice today be to educators and trainers in general in skilling the banking workforce of the future? So they come, they sit in front of you, and they say, Dr. Hagata, please advise us. What would your advice be for educators and trainers?
Well, I think that there are certain principles that are still important. I mean, the principles of giving credit or looking at a loan is not going to change. The principles of an investment product and what the investment, if you want to invest in, say, listed stocks or into an equity fund, that's not going to change. So those principles are still important and they still need to be taught, I think. But it is all about then continuous professional development and making sure that you stay abreast with the changes that are happening to the industry. And we always read also about these competencies that are needed. So there is critical analysis, you need to be resilient, you need to be able to adapt to change. But those, in my mind, are not really new. They've always been there. I mean, you always needed to critically analyze things. You always needed to be resilient. So those, in my mind, are but over dramatized. I think they are still the same. So it doesn't mean
the context is just changing. Yeah, absolutely.
What did you say?
No, so just the context is just the context that is changing, but those are
Yeah,
all, we still have to apply those, critical analysis and so forth.
yeah.
Antje, from our side, thank you so much. We are now on the hour, and for everybody that joined us today, thank you very much. We trust that you information that you can take away with you as you reflect on your own, whether you're as a customer or you perhaps employed in the banking industry. And now you know who the go-to person is, where you want to inquire or get advice or some guidance in journeying into this future that would look significantly different from our banking perspective as well. Antje, again, thank you so much. To everybody that attended, thank you very much. Wish you all the best, and we look forward to seeing you at our next webinar again. Thank you.
Thank you, Cobus.